Yeah, piercing veil. There's a lot of things here about piercing that corporate veil. Some states, for example, don't actually have significant protections for single member or the assets of single member LLCs. A lot of states don't. Florida is a good example of this. They have a lot of case law where that veil has been pierced because it was a single owner, single member LLC, and the owner owned an LLC that had a bunch of assets in it, like real estate. There's been a lot of cases where the owner gets sued and the court says it's a single member LLC, so we're just going to pierce that corporate veil and grab assets in the LLC to satisfy the judgment. Other states, like Wyoming and Nevada, for example, they have very clear statutes that do not allow the courts to pierce the veil in that way. So, in other words, they give the same protections for single-member LLCs as they do multi-member LLCs. In Florida, if you had two members that own the LLC, so oftentimes you'll see with Florida LLCs, people will say, I'm going to be a 99% owner, and then I'm going to have a partner that owns 1%. So then you avoid that part of piercing the veil, or that possibility of piercing the veil, because it's no longer a single member LLC. It's a multi-member LLC, and then they can't pierce the veil in that case. In my opinion, if you're doing it just to own assets, why bother doing a Florida LLC with a 99% member and a 1% member when I can just do a Wyoming LLC and I don't have to worry about that? Because it's going to be much easier to do a Wyoming LLC as a single member, because once you have multi-members, you have to do a partnership tax return. Single member, it just flows through to your Schedule C on your tax return. So it's much easier to do a single member LLC than multi-member, and that is a way that corporate veil can be pierced in a lot of states. But Wyoming, Nevada, also Delaware are three states where that can't happen. So that's one way that the corporate veil can be pierced in that way. Another way is when you commingle personal assets and business assets. Let's say you have an LLC and you go open a bank account for that LLC, and you've got a credit card or a debit card for that LLC, but then you use that credit or debit card for personal expenses. You go take a vacation and you pay for it, you buy your plane tickets on that company credit card. Maybe you have some meals or some dinners, you take some friends out to dinner and you use that company credit card. There was no business purpose for the dinner, so you're using business expenses. For obvious reasons, the tax man's not going to like that, but also that is an opportunity where courts have taken to say you treat that LLC like your personal piggy bank, so to speak, so we can pierce that corporate veil. Also, since you're treating those assets like yours, so can we as the courts.